Hi there! If you've ever wondered what the stock market is and how it works, you're in the right place. Today we're breaking it all down in just 5 minutes. Ready? Let's dive in. The stock market is essentially a marketplace where investors buy and sell shares of publicly traded companies. These shares represent ownership in a company. When you buy a share, you're buying a small piece of that company. Now, why do companies offer stock in the first place? Well, it's to raise money. Imagine you're a business owner and you want to expand your company. Maybe you want to build more factories or develop new products. One way to fund that growth is by going public or selling shares in your company through an initial public offering or IPO. When you buy stock, you become a shareholder, which means you own a tiny part of that business. If the company does well and grows, the value of your shares typically goes up. If the company struggles, the value of your shares can go down. So, how do stock prices move? Stock prices are influenced by supply and demand, much like anything else. If more people want to buy a stock than sell it, the price goes up. If more people want to sell a stock than buy it, the price goes down. But why would people want to buy or sell? Investors make decisions based on a wide range of factors: company performance, news, economic conditions, and even investor sentiment. If a company announces higher than expected earnings, its stock might rise. If there's news of a recession or the company faces a crisis, the stock might fall. Now, there are different types of investors in the stock market. Some are long-term investors who buy and hold stocks for years, hoping to profit from the company's long-term growth. Others are traders who buy and sell stocks frequently, aiming to profit from short-term price movements. How do we measure the overall stock market performance? We use stock indices like the S&P 500 or the Dow Jones Industrial Average. These indices track the performance of a select group of companies, giving us a snapshot of how the broader market is doing. Investors often diversify their portfolios by buying stocks in different companies, industries, or even different countries. This reduces risk because if one stock performs poorly, others might do well, balancing things out. So, in summary, the stock market is a place where companies raise money by selling shares, and investors buy those shares in the hope of making a profit. The prices of stocks move up and down based on supply, demand, and a variety of factors like company performance and economic conditions. That's a quick introduction to what the stock market is and how it works. I hope this video helped you understand the basics. If you're thinking about investing, make sure to do your research and remember, investing always carries some risk. Thanks for watching and see you next time. Don't forget to like, subscribe, and hit the notification bell for more finance tips.